Hey everyone, it's Josh from JoshLM Finance. Today we are diving deep into one of the biggest corporate showdowns of 2025. And believe me, this isn't just some Hollywood gossip. It's a massive, high-stakes financial battle for Warner Bros. Discovery, with two media giants, Netflix and Paramount, in the ring. Let's break down how the big money really plays. Okay, let's just start with the headline number, $108.4 billion. That is the jaw-dropping, all-cash hostile bid that Paramount has slammed down on the table. It's a figure that completely changes the game, and really it sets the stage for an absolutely epic corporate clash. So how in the world did we get to a hostile takeover? Well, this whole saga didn't start with a fight. It actually began with what looked like a done deal, a friendly handshake agreement that was supposed to reshape the entire streaming landscape. To get specific, back in early December of 2025, Netflix and Warner Bros. Discovery struck a major deal. Now, Netflix wasn't trying to buy the whole company. No, they were being strategic, cherry-picking the absolute crown jewels, the TV and film studios, and, most importantly, the streaming powerhouses like HBO and HBO Max. And that deal was valued at roughly $72 billion, a combination of cash and stock. You know, a landmark agreement all on its own. And for a minute there, it looked like the story was over. But that's when another player decided to crash the party. And this is where that friendly handshake turns into a full-blown corporate war. Just when everyone thought the ink on the Netflix deal was drying, Paramount, with David Ellis and Skydance, launched a complete surprise attack that sent absolute shockwaves through the industry. All right, before we go any further, let's just quickly clarify what we mean by a hostile bid. It sounds aggressive, and it is, but it's a specific financial strategy. It's when a company's board, in this case WBD's, says no thanks to an offer. So the bidder just goes right over their heads directly to the people who actually own the company, the shareholders. And that is exactly what Paramount did. You see, Paramount's game plan was totally different. Their offer wasn't just for a bigger price tag, it was for the entire company. All of it. Not just the sexy streaming assets, but the legacy cable networks, the global broadcast units, the whole shebang. And maybe most importantly, it was all cash. And cash is always king. So let's put these two massive offers right up against each other. When you lay them out side by side, the differences are, well, they're pretty stark. And they tell a really fascinating story about not just value, but also strategy. Okay, let's break this down. The total value of the Netflix deal is about $82.7 billion. Paramount's a massive $108.4 billion. Netflix is offering a mix of cash and stock at $27.75 a share. Paramount comes in with a clean $30 a share, and it's all cash. I mean, on paper, Paramount's offer just looks way stronger for shareholders. But you gotta understand, this fight is about more than just the money. It's about two completely different visions. Netflix basically wants to absorb WBD's content-making machine to make its own platform even more dominant. Paramount, on the other hand, wants to become a truly diversified media giant by swallowing WBD whole, integrating everything from CNN to the Discovery Channel. And that brings us to the central question, right? The massive dilemma facing the Warner Bros. Discovery board. They have a mountain of cash on one side and a more complex, but maybe, just maybe, a safer deal on the other. It's a classic Wall Street drama playing out in real time. So this is the head-scratcher. Why on earth would you do that? Why would a board of directors look at an all-cash offer that is over $25 billion richer and say, you know what? No thanks. Well, the answer comes down to something that, in big deals like this, is often more valuable than money: certainty. Here's how the board is thinking. They believe the Netflix deal, which they've already agreed to, has a much cleaner, more certain path to actually closing. It faces fewer regulatory hurdles. A massive hostile takeover like the one Paramount is proposing, that could get tangled up in legal battles and regulatory reviews for years, with no guarantee it ever gets approved. For the board, the Netflix deal is the sure thing. Okay, so that's the drama and the boardroom. But let's bring this back to what it means for the rest of us, for investors. How does a fight between a few media titans in Hollywood actually affect your money? Right, this is where it gets personal. Because whether you own shares in these companies directly, or maybe just through an index fund in your retirement account, these massive moves create ripples all across the market. This isn't just a spectator sport. It has very real financial consequences. So, as you'd probably expect, Warner Bros. Discovery's stock shot up the moment Paramount's higher bid became public. I mean, the market loves a bidding war. The futures of all three of these stocks are now completely tied to this outcome. If Paramount actually wins, WBD shareholders could see a really nice payout. But, and this is a big but, that risk of regulators stepping in and killing the whole deal is very, very real. You just can't ignore it. So what's the bottom line here? Look, this is way more than just a fight for one company. This is corporate finance at a scale that will redefine the entire media and streaming industry. The winner doesn't just get HBO, they get to write the rules for the streaming wars for the next decade. And there you have it. If this breakdown made this whole complicated story a little clearer for you, do me a quick favor and hit that like button. It seriously helps the channel out. And of course, make sure you're subscribed for more of these practical market deep dives.
Now, I want to hear from you. Drop your take in the comments below. Who do you think actually wins this thing? Is it Netflix with the board's official blessing? Or is it going to be Paramount with a much, much bigger checkbook? Let me know what you think. And if you found this useful, hit subscribe and stay tuned for more clear, no-nonsense breakdowns from JoshLM Finance. I'll see you in the next one.